Hello, investors. It is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, August 27th, 4:41 p.m., coming to you from Fort Lauderdale, Florida, with tonight's Revere Roundup Daily Market Insight video. The state of the market, we are in an uptrend, 4 bullish green arrows with the market leaders acting well. S&P NASDAQ above the 21 EMA, above the 50-day moving average, and above the long-term 200-day moving average. Upside reversal on the S&P and the NASDAQ or Qs today. Digestion is very much warranted and welcomed to really give the stocks some high type flags, some right sides, some cup with handles, some base on bases, or just the stocks that blasted out of their bases early in a V-shaped fashion, perhaps pulls back and builds a pivot above the base. Those are exactly what we're looking for on the leaders. All right. 21 over 21 list up 0.55%, 13 up, 5 sideways, 3 down. Big 8 down 0.19%, RG8 down 0.11%, S&P 500 up 0.16%, equal weighted up 0.05%, Qs up 0.3%, equal weighted up 0.1%, Dow about flat, mid caps down 0.3%, Russell small caps down 0.55%, equities and bonds 60/40 up 0.10%, and then GROTECTION down about 0.09%. All right, so as always, heading into the S&P 500 index, we had this mini crash and then V-shaped recovery so far. And what that warrants is some digestion, at least for a healthy continuation of this trend. So as we've emerged up and come up into this 56, about 70 level, the previous all-time high, we are finally digesting a bit now with an outside day the other day, which wasn't a distribution day, followed by an accumulation day, and then another reversal day yesterday. Today we gapped down and staged a positive reversal today. And that is really positive. We're still trading above the 8 EMA, 21 in fact above the 50, back above 5,500. We are still holding this gap days, this bearish engulfing distribution day high, and that continues to be a crucial level here for us. Expectations here is breakouts to the upside. We probably see new all-time highs. Break below this bearish engulfing, probably gonna have to retest 5,500 in the 50-day moving average. The Qs, nice upside reversal, reclaiming bearish engulfing day highs, as well as the 50-day moving average, 8 EMA, and the 10-week moving average. So a lot of confluence here. Today's lows become really key. As you see, Market Smith pattern recognition is picking up a cup, and I definitely agree. Over that bearish engulfing high recently, 4 days ago, we're definitely continuing this uptrend and heading to this 500 level and perhaps even higher into all-time highs. And I really want to make a point here, and this is a perfect example. I know some people like downtrend lines like that in terms of change in trend. For me, and what I've learned from Livermore and Minervini is that when you break a downtrend line and you rally up and you put in a local high, and then you want to see a pullback contain and then take out that high. That is what Livermore referred to as in his book, the turn. And that is truly the change in character or change in uptrend for me. Yeah. Onto the Dow. Pretty much flat today, but all-time high close. Really pretty good action. This V-shaped recovery, though, definitely presents room for a pullback. So some digestion like that would make the Dow even healthier in terms of price action. Mid caps, onto the mid caps, also V-shaped fashion, and we saw reversal into those previous highs, and now perhaps we finally digest there. Small caps, similar thing. Huge move down, V-shaped recovery, reversal yesterday, gap down today into this 2,200 level. So maybe continue to build out this base. It's been all sorts of chop recently, up, down, failed breakout again. So let's see if let's just see if small caps and mid caps can finally somehow form a right side and get into a smooth uptrend that actually trends. Volatility index, the VIX, again, biggest crash in 8 days ever recorded in history. We continue to leak off here. Getting below the 200-day moving average will be key. Back to that 10 to 15 area, which will present a nice smooth uptrend. And I mean, my expectation is if we break out all-time highs in S&P, same with the NASDAQ, the VIX will continue to leak off into that Goldilocks area that we like to see. The dollar continues to leak off and is extremely weak. If we look at the weekly, broke this upper trend line and this pennant, if you were to classify as that. And this looks like there's further weakness ahead, although there will be counter trend rallies in between the weakness. As I talked about in the weekend video, with the weaker dollar, that is bullish for Bitcoin and equities. So let's see what happens. And it's also historically bullish for gold, which is actually trading at an all-time high close. So healthy action there. Gold miners, same thing. I talked about this in the video last week and on the weekend video. Gold building a nice cup with handle up here. Silver, double bottom base, take out 29 and we're gone. Maybe it forms another pivot here that you can find a cheap entry into. Bitcoin looks decent. I'm gonna go over to TradingView as always. We blasted out this lower pivot above the 50-day, reclaimed the 200-day, and even got back above the all-time high anchor VWAP, but we stalled there and now we're pulling back to retest that breakout spot. And that is usually how it works. And the key is to see that resistance area turn into support, and perhaps we'll continue building out this pivot under 65K in between the 61.5 and 65K area. Take out 65K, we probably retest 69.5K to 70K, take out that, 72K is next, after that, 74K, and then we're in blue skies. And that is the best case scenario to be in because everyone's at a profit and everyone's enjoying the day. Bonds continue trending higher, TLT as well, continue trending higher, which means yields inverse to bonds are trending lower, and that is pricing in lower growth expectations in the economy, as well as lower inflation, which we are seeing that trend. Labor market continue revised weaker, inflation, PCE, CPI, PPI, all being revised lower. So that is exactly what the Fed wants to see, actually. A little bit of softening in the labor market, disinflation, so then they could begin to look to cut rates so they can attempt to land softly, not see a hard landing. All right, so onto the tail of the tape. We're still operating the bull case above all key moving averages and really forming a nice cup with handle on the two major indexes, the S&P and the NASDAQ. A bear case would be a sustained break below the 21 EMA. News, the big one is tomorrow, NVIDIA after hours. Almost everything is weighed on that. It's one of the biggest companies in the world, and much of the S&P and the NASDAQ is weighted. Well, NVIDIA is a huge weight in the S&P and the NASDAQ. And then Friday, we also have PCE, which will be a big piece of data, inflation data for the Fed heading into September FOMC, which is around mid-September. Keys coming in today, we're watching S&P versus resistance 5642 through 67. We're looking for handles and flags on leaders, as well as some relative strength. We'll go over the 21 over 21 list later, and I'll showcase a couple stocks I've been watching. And then just monetary rotation as well. Day count up 10 out of 13 to up 11 out of 14. 13 days above the 8 EMA, 11 days above the 21. Expectations are, of course, positive. ATR is starting to drop at 1.35% for the S&P, and we would like to see that continue lower, and we would expect that to come lower, especially as we turn into, especially if we were to break out into all-time highs with the VIX lower. Sectors, bond yields were up today, tech semis were down, bond prices down, and then the dollar was down, builders, oils, and bio. We added to Kava today on this gap down reversal, holding in strong on the private equity firm selling 6 million shares. And then we also sold the hedge in QID. That did its job. Wednesday's keys, same thing, S&P versus that resistance area, which would put us in the all-time highs. And then, of course, the NVIDIA earnings reaction. And if that were to gap up, the markets, at least S&P, is probably right into all-time highs, Q's out of its recent pivot. And it'd be very good for semis, for stocks, for tech, for the entire market to see NVIDIA do well. Bottom line, upside reversal today. Digestion is warranted. Yesterday we had a downside reversal, so typical chop, typical digestion. This is completely normal. The key is to not get chopped up in this digestion. Either keep your stops tighter to have smaller losses and more stabs, or wait for proper setups, try them, gauge feedback, and adjust tactics accordingly. All right, and then this should be filled in with the S&P 500 close of 56.25. So I'll have that updated. Just didn't put it in there right now. So we'll go back to the charts. Let's go over a few charts of interest for me. First one, biotech, XBI, gap down, retested 100, held so far. It's really building a nice cup with handle here. Out of this 103 area, and I think you can get quite aggressive. That clears this huge weekly base highs. Nice monthly as well. And that is the first one I'm looking at. Kava, we gapped down today, of course, on that private equity sale. Closed near high of the day. You definitely want to see that gap fill and reclaim of the high volume close. So that's another one I'm watching. Bitcoin pulls back to this breakout area in 35, held so far. Could have bought a pullback today, but I'd rather wait for a more constructive pivot, maybe under this level. I'll add through that. And then 40, 41, 42. And then finally, ONON, super nice breakout out of this IPO base. RS line, new highs, huge earnings, acceleration in earnings. And so this is looking great here. Now going over some 21 over 21 list items. As always, I'll go over like maybe the top 5 or 6 names that were up on the day, and then I'll go over maybe the bottom 5 to 6 names as well. So first one, ALNY, really great action today, a bullish engulfing on volume. We had this huge reaction on face trials data. Ants came in, pulled back to 21 EMA, found support, gapped up on earnings, which came in at 136% year over year, 107% growth in revenues as well. Couldn't get really out of there yet, stalled a little bit, could have attempted a pullback buy on this day, blasted out new highs, then pulled back into 21 EMA, and it's going now. And this is definitely not trading that smoothly. It pokes his head out, then back to the moving averages. I definitely prefer a smoother trender. TMX is another not smooth trender. It loves putting in a huge up day and then followed by a huge down day, but definitely one of the strongest stocks in the markets with extraordinary earnings revenues. It's like 9 quarters of triple digits. Huge 2024 estimates at 264%, 2025 up 46%, but the EPS figure continues to increase, as you can see, negative for all these years, and now we're into positive. So that is what we call a breakout year. Just like in stocks, it's happening in the earnings, and on the monthly, came out of a 9-month base. So that is definitely what we love to see in this name. Also in the perfect fund category as well, about 500 funds. You have a 30 million float and 6 billion market cap. So it's a perfect stock that could have potential explosive action. Upstart, we own this one. Great action after the earnings reaction, trending along with 8 EMA. There's always no complaints when something's trending above the 8 EMA. We know that the markets are starting to price in rate cuts and interest rate sensitive names, companies whose business models are surrounding lending, interest rates, mortgage rates are all trading quite well. As you can see right here, provides a cloud-based AI lending platform shared between consumers and lenders to enable effortless credit. So they're trying to disrupt the FICO score with their AI lending platform. And we'll see if they will. FICO is a huge legacy brand. It's gonna be tough to disrupt, but this is perfect action so far. Something to note, again, 4 billion market cap, 73 million float in this 300 areas of funds. That allows for explosive action. Lower fund ownership, lower market cap, lower float. That combined with maybe a reacceleration in revenue growth, earnings, and or at least expectation of future earnings and revenues is what propels the stock. That's the magic elixir. Race, Ferraris, high-end cars are definitely still in great demand. Perfect action out of this. Really a perfect flat base, and it's trending quite well. NVIDIA putting in a really constructive pivot here. Gap up into all-time highs is another buy, just like last quarter. It's an episodic pivot or a catalyst gapper, and you really just have to take a stab at it, being such a big name that it is in this market. Fortinet post earnings gap acting really strong, above the 8 EMA, now above the 74 level. So that's acting well. Now on the downside, Kava we talked about, down 6% because the private equity firm is selling. So some people are scared of that. But we did close high of the day. So subtle signs of accumulation with 12 million shares traded. RS line still in the new high. Second name that was down on the day, ITB. We poked our head out above this previous high. So far a double top. Maybe we go sideways here around 120 and then look for a breakout home builders. In a Fed easing cycle, home builders often do quite well. So we'll see what happens there with the Fed. SE down today, but inside day. So really nothing to talk about here in terms of negative action. Really just positive action coming out of that base. Earnings acceleration line though is down. So we really need to see that come back up. And you see the 2024 estimates are huge. So either the estimates are completely wrong, or this company is looking to look to book some decent earnings quarters ahead, and the stock is confirming that. And here's what most people don't understand. Actually, I'll just add this tidbit in there. You had negative 76% year-over-year earnings, and 23% revenues is pretty decent. Earnings surprise was negative 61%, and you're like, why did the stock gap up into new 52-week highs? Why is it trending? Well, the market is a discounting mechanism. It's looking forward to the future. The management probably also talked about forward guidance or expectations for the future. So that is why people buy stocks for the future. DoorDash, kind of this roundish action. I've never really seen this end up well. At least it will lead to some sort of violent shake before it builds more of a boxy formation. I don't like this wedginess, as you can see. Finally, Uber, also this kind of like wedginess action. It's starting to resolve itself, but I want more of a box, some flat tops for these stocks. And that's kind of what I like to look for. So that is going to wrap it for today's video. As always, please reach out to us. You can reach out to me at my email, ted@revereasset.com. You can also go to my Twitter, Ted H. Zhang, and DM me. But email is probably the best in terms of client relationships and formal communication. You can also email Dan and Don at revereasset.com, or you can go old school at 855 Real Wealth. That is 855-732-5932. Our website is Revere Asset Management, so you can check our website, subscribe to our newsletter, and get notified when new videos come out as well. And our YouTube is Revere Asset Management. We named our flagship portfolio GROTECTION for 2 reasons. To fulfill our dual mandate, which is to grow assets in an uptrend and protect assets when we're in a downtrend. And that is our #1 mission at Revere. And if you're interested in becoming a client, please reach out. And with that said, I'll wrap it up for today. Today is Tuesday, August 27th. Now it's 5:01 p.m. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great day.